Welcome everyone, this is the weekly strategy video. I haven't done these for about 4 years, and I figured I would bring them back because I'm not sure I'm going to be bringing back the live streams for now due to my commitments to Sept TV. I have the daily London sessions that run from Monday through to Thursday, and then I also have my appearances on fast markets and markets talking with D segment, so I want to keep my focus over there. And for now, I figured I would bring back the vintage Market Stalker D weekly strategy videos. I also feel that they have maybe more value than some kind of a transitory intraday setup that, you know, you're not there to see and you're kind of looking at it post fact. So yeah, I feel that even for my own sort of weekly analysis, this would be a very good thing. Some things have been changing in crude oil. There is a tendency for crude oil to trend more during Asia and or London than for its main NYMEX session. So I figured I would start off the weekly strategy videos talking about crude oil. We're going to talk about DAX and maybe a couple of other things as well, but I just wanted to give an overview of crude oil weirdness this year. So that's the weekly chart. On the weekly chart, we have a bit of a range. If I look at the candles and the sizes of the candles, they're a mere 250 ticks. So that's nothing for the weekly chart. Now, obviously, we have some wicks, and that does bring the entire range to 764 ticks. Again, this is a range that we did pretty much in one day during COVID. And we've had enough geopolitical uncertainties this year, with the election year, Middle East stuff going on, for crude oil to technically and traditionally to be pretty volatile. That's not happening this year, right? So we're experiencing some Twilight Zone shit over here. Now, if I look at the daily chart, every time I look at these reversals that are very visible on the daily chart, they happened during London into the overlap. And then the move kind of carries on until 3 p.m. my time, which is 10 a.m. Eastern, and then it sort of fails the auction for the NYMEX session and then gets stuck in about a 30-tick range. So very unusual. On this chart, you will also see me marking the high and low of the previous Wednesday's inventories number. I use that to sort of gauge, are we above it? Are we below it? What is going on? It can give you a bit of an indication of a trend that might be either with the number or against it. And that number in recent years has meant absolutely nothing. But there are certain macro things that need to be taken into account with crude oil because it does have a relationship with interest rates and inflation and a whole bunch of other stuff. So it's nothing that you can use on an intraday level, at least not confidently, because crude oil is very technical intraday. But, you know, it's kind of helpful to understand the role of crude oil to some sort of a basic degree even. Now, when I'm trading even intraday, I always have the 3 and 4 hour chart and a 30-minute chart in front of me. Whether I'm executing from Bookmap or from a 1-minute chart, 2-minute chart, that's executions. That bears no relevance to direction, right? Direction I always take from something bigger. And in order to prevent me from losing the plot on a 30-second time frame, I usually like to keep the 4 hours or even 3 hours, which is a little bit quicker, and then the 30-minute chart with the TPO profile at all times. Now, I'm going to use my lovely Blahtech indicators as I always do. This is a MetaTrader platform on AMP futures with real futures contracts. These are CQG contracts. And let's kick off the backtest mode and see what was going on. Now, here we see that the crude oil completely stopped moving. This is overlap into NYMEX. So this is London, Asia. So this is all Asia, London, and this is NYMEX. You know? Same thing here. We have Asia, and you can see it by the profiles when they kind of kick in. Here's another Asia move, London move, and then nothing. Like absolutely nothing. So my whole experience for the last 8 months on crude oil, that it was so liquid. I'm expecting these like big moves. You know, I've been trading crude oil for 11 years. I know how it moves. And then we do that. It just kind of gets up there. It looks like an out-of-hours session, right? So now I actually started executing my crude oil trade. Usually do about 1 or 2 a day. And I've been starting it for sort of the slightly later London session. So let's say in the 3rd hour of London. And it will usually carry some sort of a level there. But sometimes it's just about daily demand, failed auction long, off we go. It could be as simple as that. But I'm going to go to the 30-minute chart now. And I'm going to, again, kick off the Blahtech backtest mode where you can see all of these levels playing out nicely. Now, this was Thursday, sorry. This was Thursday. Thursday, we popped into the daily demand, then started to reverse. And in this case, this was a responsive long setup. Why the responsive long? Because if you look on my panel where I have a very brief breakdown of how did we open in relation to yesterday's value. If you're on the program, you know what I'm talking about. So we look at open sentiment. Are we opening in balance or out of balance, and by how much? Well, this one opened inside value. So the logical thing to do there is to wait until the price tries to exit from the value area. And then if it reverses from after popping outside of value, that's your trade. It's called a responsive long trade. That's exactly what we had here. But look at the time of day. This is like 10 a.m. London. 10 a.m. London. That's when the move started. And then it goes into a mean reversion to VWAP, reclaims VWAP and fails the auction, continues to just shoot up, and up. And this is where basing things on time, so having a time stop rather than 2 hour or 1 hour or just aiming for any sort of a price-based exit, has actually been much more beneficial for me. So instead of aiming for 2 hour, I will actually keep this trade for 3-4 hours until we get to what I call the post-NY cut, which is 3 p.m. in London, 10 a.m. Eastern, when the option expiries in Canadian dollars start happening, which have a knock-on effect on crude oil for many different reasons, which I'm not going to get into right now. But basically, that was my trade. So I run it for about 3 hours. It gets to NY cut. I cut it. Done. Whatever amount of money it made, that's it. So that's an approach that's been working better for me than trading NYMEX. And sure, on this particular day, Thursday, which is post-inventories, we did have a pretty nice failed auction. I didn't really manage to catch this very well because I already had several attempts of going into this long, finally got one. And then I was sort of very skeptical about it because I was like, is this really a failed auction? This looked like passive buying to me. So I didn't manage to get any sort of a trade. And then it did the same thing that it was doing for the last 8 months. So does basically a massive move for initial balance and then just gets locked up into a very tight range. Now, this one had a pretty decent range on the day, but it was still nothing like we used to have on crude oil. So again, for me, this was very difficult to catch, like one massive candle of 70 ticks and tight. Again, another drop of 90 ticks and then chopping, barcoding. So not very easy, at least not for me. And primarily, this was all me. That was all on me because I was mistrusting the failure of the auction. I didn't want to take it as a signal. But it happened. There it is. However, on a lot of the other days, NYMEX has been very muted. This is the inventories report. Now, inventories report, like I always like to say, it's a bit of a storm in a teacup. There's a lot of algo spaz that happens and then nothing. And this was a very typical NFP day. Sorry, inventories day. NFP? It is NFP week. That's why it's like in my head. Now, if we go further to see what else is happening, here's a day when we had some news over in the Middle East. And then again, it went into a bit of a respectable trend. But this is an outlier, right? This is a very nice move. Then here is another pathetic NYMEX session where it barely fails the auction and it just goes nowhere. This is like 4 hours of 50 ticks. Like, it looks like Forex. Like, what is going on? And yet, London, again, kicks off a nice move, keeps going up. If we keep going back, here we go. London kicks off a trend, keeps going up. We get to New York, and this one, comparatively, again, for the first 4 hours or so, 3 hours, it has a 50-tick range. And in fact, the entire NYMEX range was still only 100 ticks. So this has been kind of the theme of the day and the week and the last several months on crude oil. So if you want to try and take advantage of this, I would actually suggest to start looking at crude oil during London. It seems to move a lot more. So why are we trading NYMEX with pathetic ranges and zero follow-through when you have a nice trend? You know, it trends hard. It really trends hard during London. And that's what you want. All right. So is there anything else that I wanted to mention about crude oil? Yes. This kind of applies across the board. Whenever you have a week or a couple of weeks of extraordinary volatility, I've noticed a few of you are trying to use the average daily ranges and average session ranges that are calculated over the previous 10 days or 14 days. That's fine if we have relatively normal weeks. But what's been happening for the last 2-3 weeks is that we've had extraordinary volatility out of hours. So in order to prevent that from polluting the data set, you may want to consider increasing the number of days that the indicator, Blahtech DR, is actually calculating. So instead of 14 or 10, which is our default, I've actually been calculating it on 40 days. So I want to see what happened outside of the outlier weeks, and I want to use those levels. So that's just something that I wanted to kind of throw in there. You have to use logic and common sense for a lot of these things. And unfortunately, some people just use the indicator without maybe fully remembering or understanding what it does, because I know a lot of you know what the indicator does, right? Sometimes we kind of lose sight of outliers versus normality. And what's been happening is that the levels are not being reached because you're basing your data set on an outlier, and now you're expecting some more normal days to reach those levels. It ain't happening, right? All right, let's move on to DAX now. I'm going to drag out the full DAX chart and again start on something like the weekly chart. And I mean, this is just going to be up, up, and up. Patchy volume profile with a few low volume nodes on the way. So some of the areas of interest right off the bat there. Low volume nodes are like your fast moves away from supply and demand. And immediately when you look at the low volume node on a volume profile, you can kind of see those. And here I can see them from 188.70. I can see a bigger one from 188.06. And then finally further down at 186.18. But we do have an area of balance and a high volume node around 187.03. You can usually see those on lower time frames via supply and demand analysis. You don't even need volume profile. But it is there as a part of Blahtech market profile. If you scroll down to the overall volume, you can put profile, and then you can specify what the interval is going to be. Like for volume profile, I like to look at very, very large time frames. So I have it for 3 weeks. Okay, so let's start dropping down through the levels. Very bullish. This is just like up, up, and up and away with no breather. No breather whatsoever. Look at that. V-shaped recovery, and since then, bar like a couple of smaller days, it's just going up. It's trending very hard. Like if you caught this as a swing trader, you're like minted. But we're intraday, so let's see what we can do with this. I wouldn't necessarily fight the trend that is so strong, but obviously it depends what we have on the day. So on a 4-hour chart, again, something you should always have in front of you, I am noticing that the bearish engulfings are just not really holding. As soon as we try to create a supply, the price gets up to it, and even if it doesn't break it immediately, eventually it will break through it. This is still, a decent amount of volume trading here, and at this point, this 4-hour chart does look like it's distributing a little bit, but at the same time, you can say that it's been distributing from Friday, Thursday, and so far not bringing us any sell-offs. That would still be bullish for me. Now, the profiles, see, I used to have to do all of this manually. If I wanted to change the entire profile, I had to do like a rain dance to change it. London Thursday, bit of a P-shaped day here. And then a massive sell-off into the NY cut, straight down to VWAP, bounce, and then another higher high. So that was a good day. Like, I've been catching really nice trades on DAX. It's in this period of the year where low volume can push it into really nice uptrends, and that's exactly what's been happening. Whether this continues into the September and October can be a little bit tricky, but it is the election year, so that could actually work in our favor on equities. If all else is lining up, I probably don't want to be short DAX. However, caveat is that there are opportunities to short DAX. So if you see, there are sort of post-NY cut moves that do end the trend. So London trends one way, and then we turn around, and New York takes it back the other way with quite some force. This is like a 150 tick move. And it's supposed to be an out-of-hour session. Again, slight weirdness there, but at the same time, London is moving really well, as it usually does in DAX, so no problems there. If we look at the trends, just generally, obviously London has been trending up, and then sort of from around 10 o'clock London, all the way through 11:30, it starts to do this auction fade. So sometimes if I've already missed this move, or for some reason I only took a portion of it, because I remember this day, Wednesday, I tried to go long, and then I took it a little bit early, and then it just shot up. So I was like, but then I sat and waited, and then I actually managed to get in short later on in the day, held it for 3 hours, and I managed to get about 53 ticks out of it. So not a bad trade. But yeah, London in general trends up. But be careful of the later London auction fade that tends to happen on DAX. So yeah, DAX very bullish, just like other equities. And with that, let's have a look at ES. Just for comparison, and actually let's put them side by side. So yeah, very, very similar. Look at that. Reversal, 1, 2, 3. And actually, DAX looks stronger than ES. It pushed massively up, whereas ES sort of ended up with a bit of a doji. But looking at the equities as a whole, this is actually very similar. So yeah, for now, unless we get like a really good reversal from this supply area, and we have the supplies on both of these, I would probably stay bullish for the first part of London. And then if we see the trend sort of getting exhausted and stuff, maybe you can go short. So that's been kind of my strategy for the last, I think, about two months on DAX. Now looking at ES, again, 4-hour chart, we are at the top of the range. So this is kind of a decision point. Like I said, if we don't get a sell-off from here, this is bullish. It will go higher. It's an equity index. That's what happens. You need a catalyst for any equity to actually go down. And without that, they will sort of just trickle to the upside. But if we do get a pullback, some of the areas to look out for, let's have a look at values, even though it's going to be a holiday on Monday. But what I'm looking for here is not necessarily levels. I'm looking for whether we have value area overlaps. And we do. We have about 3 days of overlaps, which could mean bracket, range, barcode, distribution curves are overlapping, which means not much trend is happening, right? So that could be an early clue of maybe a reversal. But for now, we have no evidence of that. Therefore, until proven otherwise, we are remaining bullish on equities. All right, so I'm going to end it here because, again, I don't want to go on for too long. Hopefully this is useful. Leave your comments down below if you have any sort of questions. That definitely helps with the engagement and with the YouTube algorithm that seems to hate the legacy channels, such as my own. So throw me a lifeline, do a like, do a comment, and I will see you guys later on for the London session on Top Step TV, because yes, it's still happening, because London is not on holiday. I will see you then.